The stock market is a system unlike any other. It's more than a list of numbers on a screen or a daily news headline. It is a global mechanism that reflects the collective hopes and fears of millions of investors. Over decades, it has created and transformed wealth, lifting ambitions, fueling innovation, and in some cases, redefining industries. At its core, the stock market is a place where opportunity meets uncertainty. When individuals invest with patience and discipline, they tap into a force that can generate growth over time. But markets also demand balance. The balance between risk and reward, between strategic thinking and emotional control. Long-term investors know this. They understand that markets do not move in straight lines. They ebb and flow with every economic report, every earnings announcement, and every geopolitical shift. A stock's price on one day tells a story about the market's expectations. Over time, that story can become history. This documentary explores one such story, one rooted in technology, competition, and the evolving landscape of transportation. It examines how a market narrative unfolds, how investors react, and how a single company, small in price but large in symbolic value, exemplifies the broader journey of innovation and challenge in the modern economy. Markets don't promise prosperity. They offer a platform where informed decisions, grounded in research and perspective, can create lasting impact. That duality of opportunity and risk is the heartbeat of this financial ecosystem. Today's economic world is defined by rapid change. Advances in technology and shifting consumer behavior are creating new industries and redefining old ones. Among the most transformative sectors is the electric vehicle, EV, industry, a segment that touches transportation, energy infrastructure, the environment, and global manufacturing. Electric vehicles are more than a trend. They represent a structural shift in how societies think about mobility, fuel dependence, and emissions. From major cities across the United States to manufacturing hubs in Asia and Europe, companies in this space are designing, producing, and delivering vehicles that operate on electricity rather than traditional internal combustion engines. This industry matters globally for several reasons. Economic impact. EV manufacturers create jobs in engineering, assembly, supply chains, and charging infrastructure. Consumer influence. As prices of EVs become competitive, more drivers consider electric options for everyday use. Infrastructure evolution. Public and private charging networks are expanding, reshaping urban and highway landscapes. Whether it is in Detroit, California, Shenzhen, or Berlin, companies in this sector are pushing boundaries. Their factories hum with activity, their engineers work around the clock on battery efficiency, and their vehicles are symbols of a transportation revolution. Within this context, investors pay close attention. Some companies grow into household names with multi-billion-dollar valuations. Others start small, trading at prices that invite curiosity and debate. The story we explore here sits with the latter, part of an industry that plays a central role in modern economic transformation. At its essence, the company we will examine is part of the broader electric vehicle ecosystem. Its business model revolves around providing infrastructure and services that support the adoption of electric transportation. While many companies in the EV sector focus on building cars, trucks, or specialized hardware, this company operates in an adjacent space, one that is critical to the practical use of electric vehicles across the United States and beyond. Its primary revenue streams emerge from building, operating, and expanding networks that electric vehicles rely on. In recent years, it has reported notable year-over-year increases in revenue as demand for electric charging has expanded. For example, one of its financial results showed a 36% increase in revenue and growth in charging throughput, even as the broader market faced political and economic headwinds. The company has not yet achieved consistent profitability, a common situation for many businesses in growth phases. It continues to operate with investment in expansion as a priority, moving toward a point where increased scale may yield more stable cash flow. Investor interest is shaped by several factors. Growth in EV adoption. As electric vehicles gain market share, the need for charging infrastructure increases. Strategic partnerships and government policy. Infrastructure deployment often intersects with public incentives and regulations that encourage electrification. Market confidence. Despite volatility, the company has maintained investor visibility through earnings reports and guidance. Yet this narrative is not without challenges. Like many early-stage businesses tied to long-term transformation, it faces execution risks, competitive pressures, and capital demands. This sets the stage for our mid-story reveal, a moment that transitions from concept to the reality of a specific company in focus. The company at the center of this documentary is EVgo Inc., a US-based electric vehicle charging network operator that has emerged as one of the more widely discussed names among EV-related stocks, trading below the conventional high valuation brackets. EVgo stands out because it represents a critical piece of the EV ecosystem, charging infrastructure. While many companies pursue vehicle manufacturing, EVgo focuses on the network that enables those vehicles to operate, a backbone for a future in which electric transportation is mainstream. Investors watch companies like EVgo closely for several reasons. Positioning in the market. EVgo runs one of the largest public fast charging networks in the United States, with thousands of charging stalls across numerous metropolitan areas. Growth potential. The expansion of charging stations and throughput, measured in the megawatt hours delivered to vehicles, is a direct indicator of broader EV adoption. Financial trajectory. Recent earnings reports have showcased increasing revenues and adjusted operating performance that exceeded market expectations. In the broader stock market landscape, EVgo's shares classified it among electric vehicle-related stocks, trading under $5, often described as penny stocks by price measure, though not by corporate ambition or potential influence. In this segment of the market, narratives are diverse. Some companies focus on vehicle production, others on battery technology or components. EVgo's niche is clear: power where it matters, at the point of use. To understand EVgo's story, we must look at its history and development. Founded in the early 2010s, EVgo emerged at a time when electric vehicles were moving from niche to broader consumer interest. Early adopters of EVs often cited range anxiety, the fear that a vehicle would run out of charge before reaching a destination, as a barrier to adoption. A public network of fast chargers helps reduce that concern. Over time, EVgo has achieved key milestones: network expansion, rolling out fast charging stations in major metropolitan areas to support commuter and long-distance travel, technological integration, partnering with automakers, and leveraging software platforms that help drivers locate and use charging stations. Revenue growth, incremental increases in sales as utilization of charging infrastructure rises. Yet the company has also faced challenges, profitability hurdles. Like many infrastructure plays, revenue expansion has not immediately translated into net profits. Continued investment and operational costs remain significant. Competitive landscape. Other charging networks and emerging technologies create competitive pressures. Macroeconomic forces, economic cycles, and policy shifts influence capital availability and consumer behavior. From an investor perspective, these points introduce both advantages and risks. Competitive advantages: early mover in U.S. fast charging infrastructure, a network that integrates with major EV models, demonstrated revenue growth even in challenging macro environments. Risks involved: continued need for capital investment, uncertain path to sustainable profitability, sector volatility, especially in companies with prices under $5, which historically exhibit greater price swings. Short-term investors might fixate on quarterly results or stock price movements. Longer-term perspectives consider broader market adoption curves, infrastructure utilization trends, and regulatory support for clean energy transitions. EVgo's narrative is not one of overnight transformation. It is a story of gradual build-out, market validation, and the tension between growth and profitability, a balance that defines many emerging companies in large-scale structural shifts. Looking forward, EVgo operates within several macro trends that influence its prospects. Industry expansion. Electric vehicle adoption continues to grow. Charging infrastructure will be a central piece of that evolution across urban, suburban, and highway corridors. Infrastructure investment. Wow. Public and private investment in charging networks, including potential incentives or subsidies, can accelerate growth trajectories for companies building out these systems. Technological progress. Advances in charging speed, software platforms, energy management, and grid integration could further elevate infrastructure providers' roles. However, the future is not a straight line. Competition will intensify as other charging networks expand and new technologies emerge. Capital constraints may affect how rapidly infrastructure can grow. Regulatory environments can shift with changes in political leadership, affecting incentives and planning. Still, the narrative of transition, from internal combustion to electric propulsion, remains intact. For EVgo, future expectations are built on balanced optimism, recognizing both the structural market demand for charging solutions and the practical challenges of scaling a national network. The story of EVgo, and others like it, is not simply about stock prices. It is about innovation, infrastructure, and adaptation in a changing economic world. Markets have a way of amplifying narratives. Some are rooted in hype, others in measurable progress. What matters most is research, context, and understanding, the kind of deep look that separates headlines from reality. Opportunity exists in markets, but so does risk. As industries evolve, stakeholders must engage with information thoughtfully, always appreciating that learning and perspective hold greater value than speculation alone. In the end, the stock market reflects collective judgment, sometimes wise, sometimes uncertain. It rewards patience, informed thinking, and realism. And in sectors like electric mobility, it continues to tell the story of tomorrow, one chapter at a time. The electric revolution is underway. The infrastructure that supports it is just beginning to show its full shape. And in that unfolding narrative, companies like the one we've explored today play a meaningful part. not because they promise easy gains, but because they embody structural change in the global economy.